Good morning, everybody. It's Tuesday, June 8th. Just want to run through the morning charts and recap of what the S&P did last night. Hopefully everybody watched the evening video update explaining what I was seeing in the S&P, which actually unfolded pretty much as planned throughout the night. Anyways, I'll show you that in a minute. Here we've got the Kiko overlay chart. Not a whole lot going on here other than the previous day we had it had found resistance here, and yesterday it broke through it and had a nice big rally up. And we've got resistance on the daily chart around the 1250 area, which is where it's pushed up to now. It just broke it and is creating a little bull flag. These are multiple little bull flags here. So right now we're trading at resistance. If it breaks through, I don't really want to chase it. It depends what the volume is. I'm sure it'll be pretty big volume, but I don't like to. I'm not a breakout trader. I'm not a big fan of it because a lot of times you just get these. Let me just clear the chart. You'll get these little spikes. It'll break out, people jump in, and then it just gets sold back down. So this happens on all time frames. So on the daily chart it could break out, but the next day it could sell right back down again. So I'm not a big fan of breakout trading. I'd rather see a breakout and a pullback to this area, somewhere the 1250, 1245 area or so, or even 1240, and then look to add into the position. So that's what I'm kind of looking for gold. As far as the gold chart, here we've got every candle here is 4 hours. Anyways, if we take a look at this chart, we caught the first wave up, took some money off at 12 change here. We moved our stop up. Unfortunately, we got swung out by a couple bucks, which is a little frustrating, especially when we see gold take off like that. But we did catch the first half of the move. Now it's trading at resistance, and not a whole lot we can do, in my opinion. Like I said, I'm not a breakout trader. I don't want to just jump in and chase prices higher, especially after you look at these trend lines. They're going pretty straight up, and a lot of times when you get a straight up move, you'll get a very sharp pullback, and just enough to really shake you out of a trade. You can be up some good money pretty quick, but in a blink of an eye it'll snap back. Everybody starts taking profit, and then a lot of people jump on board, and then it drops straight down. So I'm not a fan of breakout trading. It's trading at resistance right now though, and we'll just have to see what it does. We could see it move sideways underneath this resistance level for a little bit, and possibly we could put a stop in just below the low of this little flag here, and then possibly buy it down here or buy it on a breakout, and that'll really reduce the risk by about 10 or 12 bucks. But still, it's not a play that I like. It's kind of getting a little too aggressive in my opinion, and it's all about preserving capital. And the fact that gold jumped straight up 10, 20, 30, $40 in the last 24 hours, it could easily pull back that same amount, or at least to the 1230 area. So that's what I see for gold. Let me just pull up the SP 500. Okay, SP 500, here's the 60-minute chart. Yesterday we saw the market, on Friday we saw the market just continue to grind lower and lower and lower, and then we ended up, it closed somewhere right around here. At futures trading, it drifted lower, came back up, pretty much tested into that resistance level, and then yesterday we saw the market dip in the morning, rallied back up, and the rally was on fairly low volume, and then it just waterfalled and closed at the low of the day. Now we did take a small long position here, anticipating a rally. We did get a nice rally up into the 1061 area, which was pretty much a 1% move up, which is pretty good. Hopefully everybody saw the video, and if you're trading futures, you took some money off the table and possibly actually went short here. You catch another percent down. Right now it's drifting back up, so if it's trying to bottom. The market is really trying to bottom here, which is why I looked to we went long. we've got this long sell-off Friday. Now we're starting to get this choppy top action, possible head and shoulders forming. So that's what I'm seeing there. If I just zoom out on the chart a bit here, okay, pretty much what happens is when you get a move up, you'll start to get this choppy action. So the trend was up, and you'll start to see the choppy action, and then it reverses, and then you'll get a sell down. This one doesn't have it quite as clear, but there was some serious chop in there, some wicks down and rebounds. Anyways, we get a trend up. You get these this choppy action. You can see you get all this. You can, depending where how big you want to count the chop, but you start to get these, these sharp sell-offs and rallies, and that's kind of what we're getting down here. It's oversold, but it's getting choppy. So I'm expecting a move up, which is why we took a small long position over the next couple of days. Pretty much I like to take some money off the table at 1% gain. That's just a natural move that the market will do without really even batting an eye or causing a big issue. So I like to take money off at 1%, which was the 1057, 1060 area. But overall, we've got a sharp sell-off on Friday, and usually, let me just clear this up. In a downtrend, we want to, I'll just draw over here in the empty space. In a downtrend, we have a sharp sell-off, and then we have a bear flag, which it drifts up on light volume, and then we have, another leg down. But what we saw yesterday is Friday we saw the sell-off, which is the first leg down, and now we're seeing the flag actually continue down, and that's a sign to me that the market is getting pretty exhausted. We did break the previous low, which flushed people out and had that sell down, and that's where it rallied into right here. And then once it broke this low, it washed out another group of people, which you can see by the volume, and then it drifted up into the resistance level, which I pointed out in last night's video, and now it's sold down and it's broken this low. And there was a pretty good surge of volume, considering it's future, like it's outside of regular trading hours. So there was a pretty good surge there, some panic selling. We could see a stretch down and break this May low, and that should be enough to send the market internals flat out pretty much a good buy. Everything will be completely oversold. So I do want to set our stop. If you are still in the position, I want to set our stop at the May low. I'll send an email out with the prices for the ETFs and things like that. But if you want, you can just simply look at the ETF you're trading, see what the May low was on your charts, and then you can set your stop there. But I will get that out to you right away. Anyway, so what I'm seeing here is we could get a washout and we could get taken out of this trade if you're still in it. Had a nice little pop. I own a tiny position long in the S&P. I just kept a little bit, hoping we're going to get a move up here because it is getting exhausted. So that's what I see for the S&P. As for the market internals, just quickly run through these. Put call ratio, it's up close to the 1, but not usually I want to see it over 1. If we get some washout selling today, this will most likely jump over 1, which is a bullish thing. New York Stock Exchange advanced decline line, it's not trading below the 2000 mark, but it's down near the bottom of the range, so things are a little oversold, pointing to maybe a small relief rally through the day. The NYSE Trin, nothing really special, it's just traded sideways. The VIX here, it started to move up yesterday a little bit. I think if we get a washout this morning or today, we're going to see a jump to the 40 level, which is what I've been pointing out for a couple days. Anyways, that would form this head and shoulder, and then which would cause the neckline, and that should wash people out. Once this neckline's broken, we should see a pretty good rally on the equities. Anyways, that's it for this morning. I'll talk to you guys later. Bye bye.